Good night, everyone. Thank you so much for joining us today. Please let us know where you are joining us from, which part of the Bahamas. If you are from Elizabeth, then welcome. It is great to have you. If you are from any other part of the Bahamas, these classes were started to, of course, empower every Bahamian that is interested in partaking in Forex. So really looking forward to tonight. I wanted to start off with just a bit of some review, but unfortunately, because of course we were supposed to start at 6, and you can see the time, it is 7:30 due to supporting Lincoln's Live and of course the live update, which was very important about the repatriation of the illegal immigrants within the Bahamas. So that being said, tonight we are going to have to cut down on some of the information that we were supposed to cover. So we are going to be covering trend lines next week. And tonight we are going to be covering Forex Fundamentals as well as Japanese candlesticks. So before we actually get started, please bow your heads. Father, we thank you so much for this opportunity once again to come together and for another chance to learn more, another chance to further whether it is our purpose that we are pursuing or whether it is another step forward for whatever it is that you are calling us to do. Lord, we ask that you would guide us. We ask that you would give us the wisdom, the knowledge, the understanding. We ask, Father, that you take this and you multiply it, because we know, God, that you are the God of the impossible. We know that you take what was meant for our harm and you use it for our good. So we are asking you, Lord, to just take this opportunity that we are pursuing and to magnify it into something great, greater than we ever thought possible. And in Jesus' name we pray. Amen. All right. So, gotta be honest with you guys, today I do feel like, I guess, letting my hair down. So that's why we're seeing all of the hair today. I know some of you may be wondering, wow, what's up with the hair? But yes. So all of this is my hair, finally letting it down. Without any further ado, let's get straight into our lessons. So today we are once again covering Forex Fundamentals, which Forex Fundamentals is, of course, the news. So it is trading the economic news. Good night, 3 Archer. Great to have you with us. Good night to everyone. Feel free to say hello once you get on. Feel free to ask any questions if you have any as we go through each of these steps and each strategy. I am an interactive teacher. I do love to communicate with my students as I'm teaching them. So please do feel free to ask any questions throughout, and I will respond as soon as I see it. All right, so what is Forex Fundamentals? Forex Fundamentals is a term that is often used in Forex to refer to economic news. Economic news indicates to a Forex trader how they can expect for the market to move. So there are platforms that you can use, such as, just give me a minute to remember the actual platform. I want to make sure that you guys can access this information. But there are platforms that you can go on that will show you economic news and update you on it. Smart Trader actually has a tab that is specifically dedicated to it. So if you look at that section within the active trader that is for the economic calendar, you can see what news is going to be coming up from today onward, and really from, you can see we have news coming up from 7:50 for Japan. So that is going to affect the Japanese yen and any currency pair that the Japanese yen is a part of. So each of these economic news, or each of these items within the economic calendar, they have flags or folders, or just based on whichever platform that you're using to view the news. So it's going to show you different colors based on how powerful the news is going to be in the movement of the market. So since Japanese yen is what is coming up at 7:50 p.m. and it's 7:38, I'm just going to go to a JPY pair so we could see how that is affecting the news. You can see right now the candles are already starting to move sideways. This is usually what happens whenever news is coming out because buyers nor sellers know what, whether it's the government, the central bank, whichever type of news, they don't know what it is that they are going to say, so they tend to not trade as much. They tend to not buy or sell as much until the news comes out, and that determines which direction they would start to trade in. So whether it's buyers or sellers, they tend to buy less or sell less. Other than that, you just have the normal activity going on in the market where persons are traveling, and of course the exchange is still happening through the Forex market. Persons are still exchanging their currencies when they are purchasing items online or anything to that effect. So you will still see movement, but not as much as usual. So just so you could see what the different colors represent. Yes, so 3R is asking, is everyone basically on pause and watching? Yes, so for those that are trading the Japanese yen, they are basically waiting for the news to come out at 7:50. So all news can be graded in the effect that it's going to have on a currency pair. So, for example, if it's going to have a minimum effect, it is usually displayed with a white colored folder, flag, or label. It usually has no effect on the market. So persons don't really tend to pay attention to, or traders don't usually tend to pay attention to that type of news. Then there are the yellow flags. So for example, the monetary base, just to show you guys the chart again. You can see it says monetary base right here. So this has a yellow flag. So yellow flags represent minor effect, so it will have some effect, but not as much as an orange folder or a red folder, which we're going to get to in just a moment. So minor effect is usually displayed with a yellow colored folder. Good night, princess. Please forgive me if I mispronounce this last name. Osaramen, I assume it's pronounced. Correct me, feel free to do so. So yes, it is usually displayed with a yellow colored folder or label. It usually has little to no effect on the market. So next we have the orange folder, which is moderate. So moderate effect is usually displayed with an orange colored folder, label, or flag. It usually has some effect on the market, which can be observed in the movements of the charts. Now, if you take a look at this currency pair, it's GBP and JPY, which is Great British Pound and Japanese Yen. And if you look, not only is there news coming out at 7:50 for the Japanese yen, but in 24 hours, we also have a Eurogroup meeting coming out. So that's also affecting the Great British Pound. So that's an orange flag. So you have both a yellow flag and an orange flag for news that it's coming out for this particular currency pair at within a 24-hour time period. So you will see some movement going on. You will see some trading, but not as much as there usually would be while people are waiting for the news to come out. So in the meantime, I'm going to switch to another JPY pair so we can see the movement. So once again, that yellow flag shows minimum effect. So you could see in a pair where there is not news coming out immediately. So the US dollar, we didn't have any US news coming out on Saturday, any US news coming out on Sunday. So what I appreciate about the economic calendar is it keeps you up to date, so you can always know whether you follow CNN or any other news, then you don't have to worry. It actually shows you which currency pair will be affected and the times that each of the news or each set of news will be coming out. So as I mentioned, the yellow flag minimum effect, you can see people are still trading aggressively within the USD JPY pair because again, it's a yellow flag, which means it has minimum effect. So not as many people are paying attention to it, but with the Euro group, the orange flag, that's definitely affecting the GBP. So if we go to another GBP pair, persons are still trading, but you could see there was consolidation. Consolidation is sideways movement. So when you don't see much of an overall upward direction or an overall downward direction, when it looks like the market is moving basically sideways, this is what we call consolidation. So you could see some persons were waiting for that news to come out, but now that the markets are open, buyers are buying, sellers are selling, so the market is still moving. So to go back to that JPY pair, we are going to be watching this tonight as we go through the various parts of Forex Fundamentals at the beginning of this training session so that you could see how the news will really affect the market. Next, we have the red folder, flag, or label, which usually has the most powerful effect on the market. It causes drastic movement on the charts. So if there is a red folder or red flag, it doesn't seem like we have any red flags for, let's see, Monday. We have one red flag for Monday. So that's coming out at 11:30. All of this is Eastern Standard Time, by the way. So if you are in another time zone, then please definitely apply that time zone. So the red flags would be for, again, that Euro pair. So I'm looking forward to 11:30. I recommend that you guys please, if you are able to, if you can be up at 11:30 tomorrow, this looks like tomorrow evening. Let's see. Yes, so tomorrow evening, if you can be up at 11:30 just to see how powerful this movement really is going to be, I would recommend that you are up because this is definitely going to affect the market whenever you see a red flag. So there's the trade balance. That's supposed to be coming out at 8:30. Then there's the interest rate decision that's supposed to be coming out at 11:30, and the rate statement that is supposed to be coming out again at 11:30. So all of that is happening on Monday. Definitely recommend that you guys are up for that. Just showing you the chart so you can see what I'm referring to. So right here, again, in the economic calendar where you can choose from the active trader. So in smarttrader.com, if you haven't signed up as yet, please go to smarttrader.com and sign up. On the right-hand side, you have what we call the active trader panel. If you select where it says active trader, then you should be able to go to economic calendar. And this is where you can access all of the news that's coming out. So you can see Sunday, October 3rd, 7:50, we have the Japanese yen. In 24 hours, we have the Euro group meeting. And then you can see what other currency pairs are going to be affected. So pay attention to the color of the flag. You could see this flag is actually white or gray. That means little to no effect. We have yellow flags, which means little effect or minor effect. Orange flags, which means some effect. And again, at 8:30 for the euro pairs, we have the red flag for the trade balance, and then again at 11:30 for interest rate decision and rate statements. So definitely recommend that you guys are up on Monday if you can be trading inside of the market. It's definitely going to be worthwhile. So knowing all of this, how do you actually apply that to your trading? Well, tonight we are going to help you with that, because there's a number of ways that you can actually apply this to your trading. Number one, you can use pending orders. So where there is a yellow flag or an orange flag, you can use a strategy that is referred to very often by traders as straddling. So what traders usually do when they are waiting on news to come out, I'm just going to use some horizontal lines to represent where persons would potentially set a pending order, or to show you how traders would use that straddling strategy. They would set pending orders, a buy pending order within, say, 50 pips range of where the market is, and a sell trade or a sell pending order within 50 pips range of where the market is. Now, this is if they are not watching the news. I don't entirely recommend this, because realistically, this can go any direction. And it even has the potential to go up, go for a buy, and then because the market temporarily moves in the opposite direction, usually right before news comes out, it can actually enter you in for a buy and hit your stop loss, and then go down, enter you in for a sell, and then it could start to go back into consolidation, particularly if there is more news coming out. So when you are trading the news, my recommendation is not to set a trade before the news comes out. So that's, again, if you are specifically trading the news. If you're using technical analysis, then what you will find is normally the news actually helps to fulfill what you have already started to read with the charts. But this is why it is important to pay attention to the news as well as use technical analysis. So maybe this is your first time joining us. I just want to cover this for a quick second. For some of you, this may be a lot of jargon that you're hearing, or a lot of terms that you may not be used to. So these are all terms that we covered in the sessions before tonight. So if you are looking for the session that is going to explain what is technical analysis, that's going to be a part of tonight. If you're looking for the session that touches on Forex Fundamentals before tonight, then you can go to, that would have been our last session. And to access the sessions, you can either go on the Facebook page, and you will be able to see Forex Part 1. So the videos are separated, but you can look for Forex Part 1, Forex Lesson Part 2, Part 3, Part 4. So I try to label them in sequence so that it's easier to follow which is next. You can also find it on the Coalition of Independence page. So again, just search for Forex Lesson Part 1, Part 2, Part 3, etc. Or you can go to the Elizabeth Independent YouTube page, and you can once again follow along. So for those of you that would have been able to watch the sessions from before tonight, or maybe you are watching this as a replay after you would have watched the sessions before, tonight I'm going to be showing you what I would recommend that you do with the news. So you could see it's now 753, which means that that news for the Japanese yen would have come out. You can see the percentages now where there were dashes like to the bottom here where it says you're repeating. So you can see the percentages, and to actually see what it was or how it's going to affect the market, you can click on the I that's right above the flag, and it'll explain it. So the monetary base release by the Bank of Japan is the currency supplied by the BOJ, including all the Japanese yen in circulation, encompassing notes and coins as well as money held in bank accounts, etc. So basically, how much of their actual currency that they have inside of their bank. If you want to learn more, you can just click on more like I did. So Bank of Japan, the Central Bank of Japan, and you can take a look at what information would have been covered. So you have September 2021. This was their most recent release. And basically, what you are looking at is to compare it to the former. So is there more debt than they had before? Is there more money inside of their bank than they had before? How is the economy faring? Is it doing well? Is it not doing well? So any bit of economic news that you are looking at, there may be a lot of numbers, but really all that you are doing is looking for a comparison of, is the country doing better now than it was before, or is it in a worse state than it was before? Once that news comes out, then you will start to see some movement in the market. After the news comes out and you know what it is that is going on, or you know what it is that is going to happen, that is when I recommend actually trading that news. So if you see that it's better, so previous was 14.4, expected was 12.6, which again is less. So that's less currency inside of their bank. And the actual is what we are waiting to see. Once the actual comes out, then we are expecting, if it's higher, so if there's more money inside of their bank, then that means it's good for Japanese yen. In the US dollar, remember with currency pairs, it's going to show the opposite movement. So for the currency that's in the back, so the USD JPY, the currency that's in the back, if the news is positive, it's going to cause the value of the Japanese yen to increase, which will cause USD JPY to decrease. So again, you could go back and learn more about currency pairs and how they work. Yes, so 3 Archer, this shows how their currency is performing. So it is related to some very important information like the GDP, for example, but GDP usually refers to how much money they have per person within their country. So not necessarily GDP, but related to that kind of news. So again, if the actual is less than the previous, then you can expect for the USD JPY to increase, because JPY or Japanese yen, the value of it should decrease. So if the news is good, basically all you're looking for is what type of news is it? If the percentage is higher than either expected or the previous, you can usually see the value of that currency increasing. If the percentage is lower, then usually it would cause the value of that currency to decrease. So that's really all you're looking for. Is it good for the country? Is it bad for the country? That determines whether you buy or sell if you are trading the actual news. But if you want to trade the news, my recommendation is not to necessarily pay attention to the yellow flags, but to look for orange flags like this one, the OPEC meeting for the US, which is coming out tomorrow at 4 p.m. So I definitely recommend that you guys pay attention to that. So This has to do with petroleum policies, stabilization of the oil market or oil industry within the US. So that's US news. Anything to do with petroleum or oil usually affects the Canadian dollar as well. If there's anything that is causing gold to increase, or if more persons are investing in gold, then usually less persons are investing in US dollar. So there are certain commodities, certain items that are linked to different countries. So whichever country it is that the news is coming out for, if you can identify what kind of, whether it's a stock, whether it is an item, a commodity, an index, whatever it is that is tied to that currency that causes it to increase or decrease, I definitely recommend doing your research to find out that information so you could see whether you would buy or sell. Now again, all of this is if you are using specifically the news to trade. If you're not using any technical analysis and you are using the news, this is what you want to pay attention to: the orange flags, the red flags. Now, if you are using technical analysis, then my recommendation would be to still pay attention to the orange flags and red flags, but you can still set trades in between, whether you see orange flags, red flags, yellow flags, or white flags. So that being said, 3 Archer is asking, so this right here is basically the trader would have to decide which trade to make, buy or sell. Yes. So the news will tell you whether you would buy or sell if you're trading specifically the economic news. So if you trade using Forex Fundamentals, which is economic news, then that is what you want to pay attention to. So this economic calendar right here, this will definitely help you a lot. It will also help you to know when not to invest, which trades to, or which currency pairs to stay away from until the news comes out, and which currency pairs to pay attention to, that kind of information. So the economic news is a great tool to use along with your technical analysis, but you can also trade just using the news. For example, Lincoln Bain is actually a scalper, so usually persons that trade the news, they scalp. If you're not familiar with the term, we covered it before, but just to give you a brief description of it, a scalper is a person that trades for a very short period of time. So as soon as the economic news comes out, what Lincoln does is, if it's good, then he will buy that currency and he'll only be in there for a couple of seconds. Once the market goes up by 5 pips, he's out of that trade, and he can actually earn a lot of money again based on what lot size you're using to trade. If the news is bad for that currency, then what Lincoln does is he will sell, and once it gets to 5 pips, then again, he's out of that trade. So 5 pips can happen within a matter of seconds. Once again, it could take 5 seconds, it could take 10 seconds, it could take 20 seconds. So this is why it is important to use technical analysis along with your news, because Lincoln is a seasoned trader, which means he knows what to look for inside of the market. For a beginner, I don't necessarily recommend that you only trade the news, but I recommend that you practice it as much as possible so that you know what it is that you're looking for. You can start to spot certain patterns within the market. You can apply your technical analysis with it, et cetera, et cetera. So red flags are a great opportunity for you to practice with. We have, again, 3 red flags tomorrow, one at 8:30, one at 11, and 2 actually at 11:30, all for the European pairs. So whatever currency that you know is tied to European pairs, you want to pay attention to that. Forgive me, not European, sorry, Australian, for Australian pairs. So anything that has AUD inside of it, for example, GBPUSD, You want to pay attention. So again, you can see that consolidation, major consolidation or sideways movement inside of the market while we are waiting on that news to come out at 8:30 tomorrow and 11:30 tomorrow. So whenever you see news coming out, if it's a red flag, usually you're going to see sideways movement in the market. All right, so all of that being said, yes, 3-Archer, definitely. It's important to get in quickly and exit quickly whenever you are trading the news. So you cannot be greedy when you are trading the news because it can change very quickly, but it can also be constant. So we have had times when the market, because of news, there have been drastic drops, drastic increases. Let me see if I can find any examples. Okay, so right here you have 3 candles. Where the market was just going, forgive me, 4 to 5 candles where the market was just going up, up, up. So that would have been 4 to 5 hours where you would have just had buying, buying, buying. The market would have been increasing in value for the Great British Pound. So when you see things like this happening, this is usually because of news. So this one candle, that was actually 48 pips within 1 hour, 52 pips within 1 hour, and these are each candle. 65 pips within 1 hour, 29 pips within 1 hour. So altogether, that's going to be about 150 pips. I'm just going to use the ruler. So this again is why I love this ruler within Smart Trader. So that's 136.1 pips, where for 5 hours, the market was just going up, up, up. So that would have definitely been a great profit if you were able to get in on that. But this is the kind of thing that happens with news that has a red label. So if it has a red flag, a red label, a red folder, whichever platform you're using, if you see that, you definitely want to pay attention to it because it can cause this kind of movement where in 5 hours, the market was just going up and you had 136 pips. And for each hour, you actually had an average of 50 pips that you could have gotten. So definitely want to pay attention to Forex fundamentals whenever you are setting a trade. So if you notice a yellow flag or a red or a white flag, again, it is best to use your technical analysis. If you notice an orange flag, like here, then, and again, if you want to know what currency pair it is, just click on the eye and it's going to say. So Swiss, this is going to be for Switzerland. So if you can find any pair that has the Swiss currency inside of it, then you would be able to trade that. So that's CHF. So whichever currency pair has CHF inside of it, once this news comes out, it's an orange flag. It has the potential to help you with whatever trade you're setting and to actually get to whether it's your dollar value goals or your pip goals. So what can help you, whether you are trading Forex fundamentals, so whether you're trading the news or whether you're using technical analysis, as I mentioned before, is pending orders. And before the end of tonight, we are going to be covering pending orders, how to set them, how they work, etc. Because one of the first form of technical analysis that we are going to be covering is Japanese candlesticks. And with Japanese candlesticks, it has the potential to show you which direction you can expect the market to go in. So candlestick formations is the technical analysis or the form of technical analysis for Japanese candlesticks that shows you when the market is about to change direction. So whether it's about to go up or whether it's about to go down. Trends would have helped you to be able to identify how long to be in the trade, to know how many pips you want to go for if it's a buy, how many pips you want to go for if it's a sell, which is why I wanted to cover them together. But again, due to time, We will have to cover trends next week, but definitely recommend that you guys are there. Along with trends, to help you guys, I will also cover what is called the ABCD sequence. So it's basically the smaller waves in between or inside of each trend to know how to read the market, and again, how long to be in there for. So it's just all of the things that helps to add up to meet your weekly pip goals or daily pip goals, whatever kind of goals you have. So if you hear me saying weekly pip goals or daily pip goals and you're wondering what is a pip, again, you can watch one of our former sessions. So a pip would be the numbers that are on the side of the market. I'm just going to show you guys the charts just so you can see what I'm referring to. So again, the pips are the numbers on the side of the markets here. So where we saw that the market was moving easily 50 pips and within that 5-hour time period, 136 pips, all of that multiplied by whatever lot size you have or however much money you're trading per pip. So whenever you set a trade, you're trading at an amount per pip. So for example, this one candle right here, the market moved 50 pips. So within, again, 1 hour, because we're on the 1 hour time frame. So if you were trading at 10 cents a pip, that would have been $5. If you were trading at $1 per pip, that would have been $50. If you were trading at $10 a pip, that would have been $500. If you were trading at $100 a pip, that would have been $5,000. All of that, again, within 1 hour. So you want to make sure that you understand what pips are and how to calculate them and all of that. And again, we will be covering that in each of our technical analysis sessions. So if you have not learned about pips as yet, if you have not come to understand what pips are, please do go back to our former sessions so that you can learn more about pips. All right, so that being said, let's get straight into our first form of technical analysis. I am so excited. I was waiting for this all week just to be able to once again start this group with you guys. So the group will be started. I wanted to start it before the session, but it's going to be started after. So as soon as I am done, I am going to be focusing on you guys getting that group together so that you can get your teams together. And we will be setting, by the end of tonight, our goal for this week 1 and next week. I am going to be asking you guys if any of you got to your goals. So we don't have to start with anything big. We can start with something like 20 pips. We can start with something like 50 pips. We can start with something like 100 pips. So you could see easily the market moves just based on which currency pair. Within an hour, the market moves basically 50 pips on average. Again, based on the currency pair that you're looking at. So it would be very easy to accomplish these goals, but the important thing is you want to set some realistic goals, because over the next 5 weeks, this is where you're going to be mastering your trade. Again, it takes 10,000 hours to master anything. So we want to be able to use these 5 weeks to master our trading so we could go on our live accounts and start trading with our real funds and make our money work for us. Because whether you realize it or not, good night, Mr. Gibson. Great to have you with us. So whether you realize it or not, your money is working inside of this market. But it's time for this money to work for you instead of you working for it. So if you are ready for that, then please grab your phones, tablets, computers, whatever you have. If you have a separate device, feel free to follow along as we cover it. Feel free to look for it within your own device or on your own charts. Again, you can go to smarttrader.com, sign up for free, get a free demo account with $100,000 on it. So again, that's fake funds that you are using to practice trading on this market. And we can get started. So there are some terms that we do need to cover. And there are some rules that we also need to set. But before we get to those rules, let's cover these terms. So there are terms that are common to basically every market, whether it is the stock market, the Forex market, whatever kind of market. So there are terms that are common to all markets, and therefore, in order to understand the market, you must first understand the jargon. So we covered this before, but just to go over it again, O's. When trading, you will either buy or sell a currency. Buyers are called bulls. They expect for the price of the market to rise after they buy. Oh, to answer Tishua's question, no, the markets don't move differently whether you have a demo account or a live account. So a demo account is when you're using the fake funds to practice with. So everything that you are seeing happening while you're using a demo account is going to be exactly the same as when you are using a live account. So you don't have to worry about anything changing. Now, the only thing that may change, you can feel free to go back to, that was 2 weeks ago, we covered what is a broker. Feel free to go back to that lesson so you can learn more about the fees that the broker charge. So there's a fee inside of the market called the spread, and this is going to be charged for every trade that you go into, but it's not going to be charged on a dollar value. It's going to be charged based on that actual currency pair. So for example, with GBPUSD, the spread or the amount that the broker is charging is 4.1 pips. To identify that in Smart Trader, it's that little gray box that's between the sell and buy buttons. So you can see whatever the spread is. Whenever you click on buy or sell, whatever that number is at, when you click on it, that is how much that they will charge for any trade. Now, realistically, this does not affect the amount that you receive at all. The fee that the broker charges, they automatically take that out within any trade that you are inside of. And it won't actually affect your account. The only thing that will affect your account is, again, based on how you trade, because just like the market can move in your direction and earn you money, this is why we are having these lessons, so that you will not have the market going in the opposite direction than you expect and lose money. We are also going to be covering proper risk management to prevent you from losing more than you can afford to. So you have to understand that at some point you will have a loss. You need to be able to gauge for an amount where when you have a loss, because it's going to happen at some point, a trade will not go in the direction that you expect for it to go in. Because the news is coming out on a daily basis and it's affecting multiple currency pairs, and you cannot possibly keep track of all of the news at all times. So at some point, the market is going to move in a direction that you don't expect for it to go in. You need to make sure that you have proper risk management, otherwise you will be negatively affected. So to prevent all of that, again, that is why we are having these lessons, so you can have proper risk management. And you will see what I'm referring to tonight. So once again, buyers expect for the market to go up or to rise. If you select buy, guess what? You are a bull. So inside of this market, you have bulls and you also have bears. But before we get to the bears, from that term bull, you have what is called a bullish market. So when the market's value is rising, then that is a bullish market. So for example, if we can find a currency pair that is moving in an upward direction, so we could see that GBPUSD is starting to move in an overall upward direction. So we would say that this is a bullish market. So the market's value is increasing. Next, we have bears. Sellers are also called bears. So they expect the market's value to lower after they sell. So whether the market is going up or down, then you actually have the opportunity to make money. So you just buy when the market is going up and you sell when the market is going down. When the market's value is decreasing, it is called a bearish market. So realistically, what happens with these currency pairs when you are buying or selling is the central bank for each of these currencies or each of these countries, they either are increasing in the amount of currency they have inside of their bank, or more of the money that's inside of their bank or currency that's inside of their bank is leaving their bank. So for example, if you have, during the Christmas time, a lot of persons purchase items from Japan because it's an industrial country. So you have a lot of laptops that are being made there, TVs that are being made there, games that are being made there. So you will find that the Japanese yen usually tends to rise and drastically at that during the Christmas time. And we have Christmas coming up, guys, so we will get to experience that, where we can all buy the Japanese yen, and while we have friends that are, while we ourselves are buying our gifts, then we could also be buying our currency and making our money back. So you could actually get to benefit from the Christmas time. So that being said, there are certain currency pairs that are affected during certain seasons just based on the habits of people worldwide buying and selling. So the Japanese yen tends to increase during Christmas time because, again, it's an industrialist country, which means they have a lot of factories, they're manufacturing a lot of items, people are purchasing those items on a massive scale. So that means that Japanese yen, they have a lot of currency that's leaving their bank. So in order for them to get that back, they have to actually buy their own currency and get the currency back into their bank. So whenever a central bank buys its currency, it causes the value in the market to decrease, which means that you're looking to sell. So they technically are buying it from you as a retail trader whenever you sell. And whenever you buy, you're technically buying it from the central bank. But this is where all of the broker comes into play, because what you are doing is actually borrowing the currency from the broker, and they are allowing you to use that for each of your trades. After you've closed your trade, then the broker deals with all of the transactions. So whether it was bought or sold, that's the broker's responsibility. But you are only borrowing what is inside of the broker's funds or inside of the broker's accounts to actually set your trades. Oh yes, GBPUSD is abbreviated for Great British Pound compared to US dollar. So to learn more about currency pairs, we would have covered that in one of our former sessions. So feel free. Isaac Gibson, the market is usually closed from Friday 5 p.m. to Sunday 5 p.m., but the market is open from Sunday 5 p.m. to Friday 5 p.m. So from Sunday until Friday, you are able to trade the market within any time. So whether you are a night owl and you stay up from 2 a.m. to 6 a.m., whether you are a morning person and you get up from 5 a.m., whether you are at home, maybe you work late in the night, so you get up at about 12 p.m., whatever time you are up, the markets are moving and they are just waiting for you to set a trade. So you'd be able to trade anytime from Sunday 5 p.m. to Friday at 5 p.m. Now, to get back to our lesson, what are Japanese candlesticks? Again, Japanese candlesticks. Okay, no worries, Isaac Gibson. So feel free to rewatch tonight's session as well as any of the other sessions that you may have missed. You can find all of that once again on the Facebook page or the YouTube page. So guys, please do feel free to also share any of the former sessions with anyone that you know. This is a program that was started to help all Bahamians that wanted to get into investing. So please take advantage of it. All right, what are Japanese candlesticks? Japanese candlesticks are a representation of the market's movement within a specified amount of time. What do we mean by that? If you go to the market, each of these lines that we have already identified as Japanese candlesticks, they show how high or low the market has moved within a certain amount of time. So the time for each of these candles is identified by which time frame that you choose inside of your charts. So for example, I'm on a 1 hour chart. So each of these candles represents how high or low, basically how many pips the market has moved within that 1 hour time frame. So if I click on one of these candles, it will show me where it says total range. That's the total amount of pips from what we call the wick to the tail. So the market moved a total of 31.5 pips within 1 hour while we were actually watching Lincoln's live. So this would have been from, if I am not mistaken, 6, yeah, from about 6 p.m. to 7 p.m., if I'm not mistaken. So that actually happened while we were, or right before we were supposed to start our session tonight, while Lincoln was live. Okay. So each part of the candle shows the trader how to read the market. The candles form patterns that shows the trader when and where to enter a trade. So just to explain that, we have the parts of the candle. Each candlestick has 3 parts: a wick, which you guys saw me point out, a tail, again, which you guys saw me point out, and a body. The wick and tail can also be called the shadow. So if you're speaking to anyone from any European country, they may refer to them as shadow. Don't worry, it just means either the wick or the tail. So each of these will have either a wick or a tail, or it can have both. So it's okay. Sometimes you are going to find that a candle has one, either a wick or a tail, or it has both, or it may have none. But again, that's just based on how the market moved, and you're going to see why it forms this way. So for example, this candle has little to no tail, but a long wick and a long body. This candle, again, no tail, small body, long wick. This candle, barely any wick and no tail. This candle, barely any wick and a small tail. So it's just based on, again, how the market was moving. So let's see why those candles formed that way. Please forgive my internet, guys, where you do see a bit of an interruption. That's just my internet moving a bit slow. So the purpose of a candle and how it works, the wick shows the highest price that the market has gone to within that time frame. So for each candle, again, remember it represents a certain amount of time. So it's the highest price that the market went to within that time frame. The tail shows the lowest price that the market went to within that time frame. The body shows where the price started when that time frame began, and where the price ended when that time began. So the original price at the beginning of the time period and the final price, or also called the open, or the final price at the ending time, at the ending of the time period, which is also called the close. So just to give you guys an example, so here's an example of a Japanese candlestick. The wick would be the thin line that shows up to the top of the candle. So that shows again the highest price that the market would have gone to within a certain time frame. The body is going to be the thick part of the candle, usually in the center of the candle, but it can form at different parts. And the tail would be the thin line to the bottom of the candle. Again, the wick or tail can also be called a shadow. So there are two basic types of candles. There's the bullish candles, which shows when the price is increased from where it started, and the bearish candles, which shows when the price is decreased from where it started. Also, feel free to rewatch and take screenshots, take notes. Again, this is a course that is actually taught within colleges. This is something that people usually pay for. So I would definitely recommend that you guys take notes so that you can have it next to your charts as you're trading, because this is something that you can definitely benefit from. So bullish candles. This is an example of what a bullish candle will look like. They are usually green. In Smart Trader, it automatically shows the candle is green. If you are using MetaTrader 4, which you guys may have heard me speak about before, usually used on the phone, then with MetaTrader 4, you would have to go into your settings and set your bullish candles to be green. And we will cover that in another session. We were supposed to cover it tonight, but again, in order to accommodate Lincoln's live update on the repatriation of the illegal immigrants within the Bahamas, we pushed our session to 7:30. So we will definitely get to that another time. Yes, Isaac Gibson, good job. Red means that the market is going down, so it's a bearish candle. So great job. So with the bullish candle, the body of the bullish candle starts at the bottom. So remember, the body is the thick part of the candle in the center, and it's where you could see the word that says open. So that's where a bullish candle starts. And it ends at the top of, again, the body. So the thick part of the candle. The wick is, again, the highest price, and the tail is, again, the lowest price. So now you can start to see it as you look at the candles. You'll be able to identify it. Again, feel free to take a screenshot. So Isaac Gibson just went ahead of the class and put his context clues and inferences together, and he totally got it. Red candles usually indicate a bearish candle, or that the market is falling or decreasing, lowering, whatever term or synonym you want to use to describe it. The bearish candle usually shows when the market is going in a downward direction. So it's going to be the opposite of the bearish candle. The body of the bearish candle starts at the bottom, but the body of the bearish candle starts at the top. So for the red candle, it starts at the top. That thick part of the candle, again, the one that's usually in the center, starts at the top and closes or ends at the bottom. So where that thick part ends. Then you have the wick to the top, which is the highest priced, and the tail to the bottom, which is the lowest price. So the only thing that changes between the two, whether it is bullish or bearish, is just where it opens and where it closes. So again, for the bullish candle, it's going to open to the bottom and close to the top. And for the bearish candle, or the red candle, which shows that the market is selling, then good job, Antishua, you got it, selling. So yes, bearish is when the market is selling. Then it's going to open to the top and close to the bottom. I am so proud of you guys. You guys are awesome. So just before we get to candlestick formations, I just want to show you guys the examples within the market again. Yes, I am a teacher that goes back and covers things a number of times because repetition is how you get it. So, oh really? This is awesome, Antisha. I am so happy that you are getting it. This is really good. So Antisha says that this is her first class with us. So great to have you with us. So yes, I do repeat things a number of times so that you guys can get it, because repetition is how persons learn. So you'll see me using the same tools. You'll see me covering things over and over again. I also want to accommodate for if this is the first time that someone would have joined us. So I am going to cover it and recover. So again, the wick is going to be to the top of the candle. So we're looking at this red candle right here. So this was the highest price that the market would have gone to within that hour, because again, we're looking at an hour time frame. And the thin line to the bottom, that is the tail. So you could see why now the candles look so different. So the tail shows the lowest price that the market would have gone to within that hour. The wick is showing the highest price that the market would have gone to within that hour. And the body of the red candle is showing where the price would have started and ended. So to the top of that body, this is going to be where the candle opened, or where the price started at when it first opens. So it opens to the top right here. And then buyers would have come in, bought, caused the value of this market to rise. And sellers would have come in and sold aggressively, caused the value of this currency to fall until it got down here to the bottom of that tail. Buyers would have come in, bought, and eventually the hour would have ended right here, where the sellers were still in control of the market at that time. So right here, this is where the candle would have closed. So again, it is the final price. So this is why the candles look so different. If you're looking at the various candles now, you should be able to identify where the wick is, where the tail is, where it closes, which for a green candle is going to be to the top of the body, and where it opens, which again for a green candle is going to be to the bottom of the body. So for the red, the open is to the top, close is to the bottom, wick is still the thin line to the top, tail is still the thin line to the bottom. So no matter which color candle you're looking at, now you should be able to identify where the wick is, where the tail is, where it opened, and where it closed. And you can see all of this starting to form as we go back to the actual price now. So you can see these thin lines where the body is just that thin line. That means that the candle would have closed almost at the same price that it opened. So when the hour ended, the bears and bulls were having so much of a fight. Buyers were buying aggressively, sellers were selling aggressively, or buyers were not buying as much and sellers were not buying as much. And as a result, the price would have closed or ended very close to where it started. So we are about to get to the actual names. So great job, Mr. Mills. You know about the hammers, you know about consolidation. So that is very good. And yes, these are signs, again, that persons are waiting on news or something to that effect. It is called consolidation. So it's when the market is moving sideways or when less persons are trading inside of the market, usually as a result of persons waiting on the economic news to come out. So you were able to see that tonight we also had the Eurogroup meeting. So we are just waiting on the numbers from that. And it's an orange flag. which shows you that this is something that you definitely want to pay attention to. If you missed the part where we covered Forex Fundamentals tonight, which is the newest, yes, so this is where you would set, we're going to get to the pending orders as well, 3 Archer. I am so proud of you guys. Okay, so yes, this is where you wanted to pay attention to those percentages, those numbers, those values. Was it higher than previous? Was it lower than previous? Was it higher than expected? Was it lower than expected? And what kind of news is it? Is it good for currency? Is it bad for currency? All of that is going to tell you whether you want to buy or sell on the candle. So it's looking like we should be expecting for this market to move in a downward direction. And I will show you guys how I was able to come to that conclusion, but it is best to wait until 9 o'clock to finalize that decision based on how this candle forms. So again, the candles actually indicate to you when the market is going to change direction. So you could see, again, where you want to enter for a buy and where you want to enter for a sell. The trends will show you where you want to exit for a buy or a sell. Yes, so we are covering candlestick formations tonight. I wanted to cover candlestick formations and trend lines, Omar Mills. But due to the time that we would have lost as we were watching Lincoln's live, we will have to cover the trends. You know what? I will see if we can cover trends just for you guys before Sunday, but I'll give you guys an update on that. So we will have to cover trends another time, but for tonight, we are covering Japanese candlestick formations. So without any further ado, let's get straight into the actual candlestick formations. So first and foremost, what are candlestick formations? Candlestick formations are patterns that form by the Japanese candlesticks before the market changes direction. They indicate whether the trader should buy or sell. Candlestick formations are formed from the two basic categories of candles. So there are 2 basic types of candles, that's bearish and bullish. But the 2 categories of candlesticks would be indecision, which are small body candles, and decision candles, which usually have a larger or full body. Again, feel free to take any screenshots. Indecision candles. So firstly, we have what our dear friend Omar Mills would have already identified earlier tonight, which is the hammer. So the hammer, it can be bullish or bearish. It's an indecision candle. It has a small body to the top of the candle, a long tail, and a short wick. So again, the wick is the thin line to the top of the candle. The tail is the thin line to the bottom of the candle. The body is going to be the thick part of the candle. So the body on the hammer is small, whether it's bullish or bearish. The tail is going to be long, whether it's bullish or bearish, and the wick is going to be short, whether it's bullish or bearish. So remember, indecision candles can actually be any color. So you have what is called the doji, also referred to as the doji star, is what is the neutral doji. So it has a thin line in the center where the body should be. So you could see we were looking at some indecision candles when we were looking at the most recent candles that were forming. So if it's directly in the center, that's what we call a doji star or a neutral doji. It has a tail and wick that's about the same size. If it has a longer tail and a very thin body. So not like the hammer that had some of a body where it was small. So that's the hammer, small body. But the doji actually has a very thin body and a long tail or a long wick. And if it has a long tail, it's going to have a short wick. If it has a long wick, it's going to have a short tail. So that's just an example of the long leg doji. Next, we have the dragonfly doji. This one specifically has a long tail, a very, very short wick, little to no wick, and a thin body that forms very close to the top. Then you have the gravestone doji, and again, it can be red or green, so bullish or bearish. Gravestone doji, this is a candle that has a very thin body to the bottom of the candle, a thin tail, sorry, a short tail, and a long wick. So these are the different types of dojis. Again, feel free to take a screenshot of it. You don't necessarily need to know the names of these, but it helps when you are looking at candlestick formations and identifying which candles you are seeing within the market. So next we have the hanging man. It's a very gruesome name, probably one of the most gruesome that you're going to come across within these candlestick formations or the types of candles. So this is an indecision candle that has a small body that's forming to the bottom of the candle. It has a short tail and a long wick, but you can see that it has a thicker body, even though it's small, a thicker body than the gravestone doji. So you can have a bullish hanging man or a bearish hanging man. So if it's green, it's a bullish hanging man. If it's red, it's a bearish hanging man. It actually got its name from an example of when they would hang someone. So you would look at the wick as the rope, the small body as the head of the person, and the tail as the neck of that person. So again, this is probably one of the most gruesome types of candlesticks that you're going to come across, but it's the only one. So hallelujah, thank God for that. So next we have the spinning tops. The spinning tops have small bodies directly in the center of the candle. So they will also have a small wick and a small tail. So you will also have a version of a spinning top, a long leg spinning top. I just decided not to include it because it's still a spinning top. But if it has, again, the body in the direct center of the candle, but it has a long wick and a long tail, then that's still a spinning top. So you can have a bullish spinning top or a bearish spinning top. Please let me know if I'm moving too quickly. And again, feel free to take screenshots. So now we are moving to some of the most important categories or types of candles. And that is going to be your decision candles. Please pay attention to these. If you did not pay attention to the indecision ones, these are the most important right here. So these are called full body candles because, of course, the body of the candle is full. So it has a large body, or it has a larger body than it does the wick or the tail. So it's very easy to identify these. And when we go into the market, we can easily find them. So you can have a bullish full body candle or a bearish full body candle. Just before we get to the actual candlestick formations, I just want to go back to the market so you can identify some of these. So here we have a bullish full body candle. Actually, we have quite a few of the bullish full body candles. Then we have a bullish hammer, another bullish hammer. You have a bearish spinning top, bearish full body. So the full body candles do not have to have a wick or a tail. So this is actually a bullish full body candle. It doesn't have a wick or a tail. You have, again, a bearish hammer, bearish hammer. You have the doji star, what is looking more like a spinning top, hanging man, spinning top, bearish hammer, bearish hanging man, bullish spinning top, bullish spinning top. And again, you can just go through and identify these indecision and decision candles very easily just by looking at them. So each of these candles actually do have a name. So you would have learned the name of them. Feel free to come back, watch the session, and then look for them within the markets. So use this as an opportunity to also familiarize yourself with the candles and the types of candles. All right, now for the moment that we have been waiting for this entire night. We are going to cover our candlestick formations. So here are the bullish candlestick formations. Now, what I can honestly say about the candlestick formations is that I can appreciate that all you have to do is memorize either the bullish or the bearish candlestick formations and flip them upside down to get the other set. So if you remember the bullish candlestick formations, just flip it upside down and you get the bearish candlestick formation for that candle. But we're going to go through them all and we're going to go through the names. So this is the shooting star. The shooting star has a full body bearish candle on the left. So it has to be a full body bearish candle on the left. And then it has a hammer on the right. Now the hammer does not necessarily have to be bullish. It doesn't necessarily have to be bearish. It just has to give you, actually I'm wrong, sorry. For this one, it does have to be a bullish hammer. So you're gonna have the full body candle on the left. For some of these, it won't matter whether it's an indecision candle, what type of indecision candle, but for this particular one, the shooting star, it has to have a full body a full body bearish candle on the left and a bullish hammer on the right. Again, feel free to go through the session again just so you can familiarize yourself with it. We're going to go to the market right quick to see if we can identify any of these. So we have the reverse here, but we're going to cover that shortly. So it is important to know that the reason why it is separated into bullish and bearish candlestick formations is because when you are looking at a market that is moving in an overall downward direction, you will, like you see here, you will see bearish and bullish candlestick formations. But all this is doing is showing you whether it's going to go further in the direction you expect for it to go in or to temporarily move in the opposite direction. So I'm going to explain more of that when we cover the trends so you can understand the waves. And again, next Sunday, we're going to be covering ABCD sequences, which explains the waves. So you can understand what I mean when I say that it moves temporarily in the opposite direction and then goes deeper in the direction it was moving in. So if you look at this market, you can see that this market was moving in an overall downward direction from here to here. So that would have been from Thursday, September 23rd to Wednesday, September 29th. The market was moving in an overall downward direction. But within these moments, you have certain parts where you can find candlestick formations that would have showed you when the market was going to go further down. So the first thing you want to identify is the market a bullish market or a bearish market? So since we are looking at the bullish candlestick formations, you want to pay attention to a bullish market, and then when we get to the bearish candlestick formations, you can look for a bearish market. So I'm going to see if I could find a market that genuinely is moving in an overall upward direction. We do have, because of COVID, a lot of countries that have lost the value in their currency. So hopefully we can find at least one where the market is moving in an overall upward direction. All right, so we are going to use Australian dollar compared to Swiss franc. So that's the name of the Swiss, or the currency for Switzerland, which again, there's news coming out for that tomorrow from, well, really this morning from 2:30 a.m. You have news coming out for the Swiss franc. All right, so let's see if we can find a shooting star within this section. So the shooting star, remember, it has a full body red candle on the left, followed by a bullish hammer on the right. Okay, so this is a bit of an example, but you could see this is more of a spinning top than a hammer, but it is one example. And again, because it was not completely a hammer, you can see it didn't really go up until afterwards. But this is another type of candlestick formation, another two types actually. So we're going to cover that in just a moment. So just so you are aware, I'm pretty sure you can see by now, the bearish shooting star is one of those candlestick formations that does not form very often in the market, but it is one of those candlestick formations that shows you when the market is moving up. It usually forms when there is going to be some movement, but if you are looking for major movement, I will identify those candlesticks formations for you in just a moment. So here we do have an official bullish shooting star. So you have the bearish full body candle on the left, and then well, this is more of the dragonfly doji than the hammer, but it is an example of the shooting star. So it could be a dragonfly doji, it can be a bullish hammer, but it just needs to have a longer tail than it does a body, and a small body to the top and little to no wick to the top. So this is a bullish shooting star. You can see that the market went up, and it went up a total of 18.9 pips after the bullish shooting star would have formed. So again, if your daily goal is going to be 20 pips, or weekly goal, if you want to start out with 20 pips, then you would have gotten your entire set of pips just by using the bullish shooting star. And if you have a weekly goal of 50 pips just to start out, then that would have been 20 out of your, well, essentially 20 out of your 50 pips. So it's just an example. But again, you want to look for bullish candlestick formations in an overall bullish market, so a market that's moving in an overall upward direction. You want to look for bearish candlestick formations that are moving, in a market that is moving in an overall downward direction. So in an upward moving market, you're just looking for opportunities to buy. So this is an example of a bullish shooting star as well. So bearish full body on the left, bullish hammer on the right, and you could see that the market would have gone up. But this is also another type of candlestick formation that we are going to cover in just a moment. So all of these are opportunities just where you can enter or buy. Now, just to show you guys how you would actually trade this, because of course the whole point of tonight is to show you how to set trades. I am just going to use the horizontal lines to represent the entry point, stop loss, and take profit. So whenever you are setting a trade, you're going to need to make sure you are on the active trader panel. You can either buy or sell immediately, or you can enter in an amount that you want to buy or sell at. So you can set a pending order, which is where you're waiting for the price to get to, the market to get to a specific price before you enter, or you can buy or sell immediately. So before you buy or sell, you can identify a stop loss, which prevents you from losing more than you're willing to risk. And, oh, good job, 3Archer. Great job. So 3Archer decided to enter a trade. Did you use the candlestick formations to enter that trade, 3Archer? And he says that he's already in the green, 5.1 pips. So great job, 3Archer. Very proud of you. Now, that being said, if this was a trade that we were looking to set and we saw the candlestick form, the shooting star, this is all we would have been able to see. Formally, we could see that the market was moving up. The bullish shooting star would have formed. It has the engulfing, the bearish full body candle on the left. Omar knows why I keep saying engulfing. We're going to touch that candle in a second. So the bearish full body candle on the left and the bullish hammer on the right. So how you would trade this is you would buy or sell once you see the candle close. So after this candle starts to form, you would not know that this candle was going to be green. But after this candle starts to form, that is when you are going to select buy. So this would be what your entry point would look like. And when you set your stop loss, then that is what it's going to look like. But to actually measure out how much you are going to set your, what price you're going to set your stop loss at, you would use the measuring tool. So once again, to select it, just go over to the left-hand side of your panel. To learn how to use Smart Trader, you can watch our last session. And again, you can access that from the Facebook page or the YouTube page. So select the measuring tool and hold down from the very bottom of the tail. So you want to drag your mouse down until you get to 10 pips. So if you can see where it says range or pips in brackets, then you want to drag that down until you get to 10 pips for a buy. So from the lowest point of that bullish hammer, that is where you're going to start measuring from until you get to 10 pips. So you would set your stop loss 10 pips below the lowest point in this bullish candlestick formation. So that's going to be 0.65535. If we were looking for a number to enter in for our stop loss, we would type in 0.65535, and that would be your stop loss. Now, Make sure you deselect the ruler whenever you are trying to edit any of your drawings. So 0.65535 is what I'm going to drag this down to. I'm showing you guys all of this for a reason, so don't worry. It's going to come in handy. And lastly, you want to set your take profit. So in order to do that, we recommend that you look to gain twice as much to 3 times as much as you're risking. As a beginner, we recommend going for only twice as much. So you're going to measure from your entry point. Again, select that measuring tool, hold down from the entry point, drag down until you get to the stop loss. So here we are risking 20 pips. Again, make sure with however amount of pips that you are risking, you set an appropriate lot size. So I do not recommend that for you guys, you trade with anything other than 0.01 just to start off with, just to get used to. So all of your trades for now, please set it with 0.01 being your lot size right here. And now we know that this is 20 pips, so we are looking to get 40 pips as our take profit. So again, you're going to hold down over your entry point and drag your measuring tool up until you get to 40. All right, so I am going to have to drag this further up so we could actually see the number for 40. And there we go, 0.66145. So we're going to turn on our limit and type in 0.66145. So that would be our take profit. Again, for a buy, you are expecting for the market to go up. For a sell, you are expecting for the market to go down. So just to show you what that would look like, that would be 0.66145. And the take profit for whether it's a buy or a sell is going to be green. So the entry point for a buy is going to be a very light green. The take profit is going to be a dark green. And the stop loss is going to be a dark red. So this is how it's going to look. Now, from where we would have entered, which would have been right here, we're going to see how the market would have played out. Would it have taken us out with a loss? Would it have taken us out with a profit? So the market is going, it's going, it's going. You can see it's actually not really entering below that stop loss or below the lowest point of our candlestick formation. And the market is going up. It almost hit our take profit. And there you go. The market would have exited us out of that trade with a profit. So I'm just going to use the measuring tool to see how many hours this would be. So again, each candlestick represents 1 hour. So we have 24 candles. Again, bars is another term for a candle. So 24 candles, that's 24 hours. So within 1 day, 24-hour time period, you would have had your 40 pips. And if 50 pips is your goal, then you would have had 40 out of your 50 pips for that week in just one trade. So this again is why you need to learn candlestick formations, because it has the opportunity to help you to earn a lot more. Another thing I like to use whenever I'm trading is what we call a dynamic stop loss or a trailing stop loss. So a trailing stop loss allows for your stop loss to automatically move itself as the market is moving in your direction. So you can set a dynamic stop loss, which means that the market moves every time that the market moves in your direction. This stop loss is going to move the same amount of pips. I would recommend that for longer term traders. For day traders, I would recommend a fixed stop loss. So every time that, if we are expecting 40 pips, I recommend you set this for 15. So every time the market moves 15 pips in your direction. So let's see. After this candle right here, then the stop loss would have moved up 15 pips. So you would have only have been risking 5 pips while the market is moving closer to your take profit. After that, the market from there, if it moved another 15 pips, or really when it moved another 15 pips, because we're expecting 40, then at this point, this is where the market would have, again, gone over your stop loss by about 10 pips, and it would have secured you with a profit, whether the market moved all the way to where you were expecting for it to go to, or whether it changed direction and hit your stop loss. So now you would have been secured with a profit of 10 pips. So whether it goes all the way in your direction, or if it changes direction, you are safe. So again, it could have been 10 pips out of your 50 pips that would have given you, or 40 pips out of your 50 pips that would have given you. So whichever direction. So that is essentially how you use your candlestick formations in order to set a trade. So you just set the stop loss 10 pips for a buy. It's going to be below the lowest point of that candlestick formation. And for the take profit, you're going to look to get twice as much as you're risking. For the sell, or for the bearish market, I just want to cover this because, of course, time is winding down and I want to be able to cover this with you guys. Okay, Three Arches says that he can just close his position in case he forgot to set his stop loss or take profit. Another word for take profit is limit. So you may hear persons using that interchangeably. So in this market, if you were looking for a sell, so let's look for the opposite of what we were using before, the opposite of the shooting star. So that would be a full body green candle on the left and a bearish hanging man on the right. So something like this, but it needs to have a full body green candle on the left. All right, so let's see, something like this. So this would be considered a bearish shooting star. So it actually has the same name for the bearish shooting star. And this is why I'm saying, if you memorize only one set, whether it's bullish or bearish, all you have to do is flip it upside down and you now have the next set of candlestick formations. So full body green candle on the right and bearish. So this is actually a bit more of a spinning top now that I look at it, but this is one of the ways that a bearish shooting star can form. Definitely, I would like to ask you guys to please make sure you only trade the bearish shooting star if you see a longer wick than the tail. But just for this example, so again, how you would trade this is on the opening of the next candle, you would select sell. So your entry point would look like, so if you notice, I'm putting the line where the next candle would have started, because remember, for a bearish candle, it starts to the top and it ends to the bottom. So a red candle is a bearish candle. It's going to start to the top and end to the bottom. Where that body begins to the very top, that's where the original price was when that candle opened or started, or when that next hour, since we're looking at the hour time frame, began. So this would actually be a light red color for an entry point for a sell. Now for a sell, instead of 10 pips, you actually want to go 15 pips above the highest point in the market. sorry, not in the market, the highest point of your candlestick formation. So that's going to be 1.87. So we could actually set that here, 1.87191. And if you're wondering where I'm getting that price from, I'm looking over here. So it's actually, sorry, it's supposed to be 1.87341. So that's where you would set your stop loss. Once you set it, it's going to look like this. 341. There we go. And it's going to be a darker red. So that's how your stop loss would look. Now we're going to measure the distance between the entry point and the stop loss. So you're risking 26.7 pips here. Now we're just going to round that off and say 27. And when we multiply that by 2, that is going to be 54 pips. So we're looking to get 54 pips. So we're going to measure from the entry point. Again, hold down over the entry point and drag down until you see the range, open bracket pips, show 54. All right. So that's going to be 1.86536. And again, limit or take profit, we're going to set it at 1.86536. So the take profit is going to look like go 1.86536, and it's going to look like this. So that's going to be your take profit. Now let's see what happens. So we could see the market started to move in our direction. If you wanted to, I would recommend again that 15 pip stop loss movement. So once the market moves 15 pips, about here, just to simulate how this would actually go. So you could set your trade, set it and forget it. You could walk away from it. So 1.86941 is where, sorry, is when the market would have moved to 15 pips. Now for here, moving this up 15 pips, that's going to be right here, 15.4. So that's 1.87184. All right, so I am just going to have to leave it within the general area because it seems like I won't be able to get specific. So that's close enough. So the market is moving in your direction, as it moves another 15 pips. Then your stop loss would have moved up. And this time it would have secured you with profit. So another 15 pips right there. So then the market is moving in your direction, and again, it hits your take profit, but before it hits that, once it moves to that 15 pips again, then this would have moved down another 15 pips. And you would have been secured with a profit either way. So this is why I love the, again, the Smart Trader platform, because you can set that trailing stop loss with fixed 15 pips. So definitely take advantage of this, you guys. Feel free to rewatch this session. So for the next one, since we know now how to set the trade for both the bearish and the bullish, I'm just going to quickly get through the other candlestick formations. Because, of course, time. So remember, bearish shooting star is full body red candle on the left, and bearish hammer on the right. Now, next we have the morning star. This is one of the most common types of, no worries, Deltrick Mills, welcome. Thank you so much for joining us. So this is one of the most common types of candlestick formations. This is called the morning star. So in order for this to be considered a morning star, it has to have a red full body candle on the left. Yes, so Omar Mills has got it. If you're looking for the bearish version, it's going to be an evening star, but it's going to be a bearish full body candle on the left, an indecision candle in the center. It can actually have a couple of indecision candles. So I am going to show you guys this one in the market so you could see what it looks like and get used to how it looks. So it can be more than one indecision candle. And then a full body green candle on the right. So this is the ideal bullish morning star. Full body red candle on the left, indecision candle in the center, and full body green candle on the right. Now that green candle must close above at least 60% of that bearish candle. So if your eyes can identify where 50% of that candle is, and it looks like it closed a little above that 50% level, then that means that it would have gotten to at least 60% of that bearish candle. That is a bullish morning star. So let's go to the market and see if we can find it. So if I am not mistaken, it was AUDCHF that we were in last time. That was in an upward moving market. Let's see, USDC. All right, so we're just going to use a part of the market where the market was going up, just to see if we can identify it. Now, it's very easy to actually find it because we have one right here. So again, these are actually the most common types of, this is one of the most common types of bullish candlestick formations that you will find in the market. So it has a bearish full body candle on the left, an indecision candle in the center, and a full body green candle on the right. You can see this definitely closed over the 60% level because it actually has a body that's larger than the previous candle. So I'll check out AUDNZD in just a moment. Thank you so much, Omar Mills, for the recommendation. So just an example, this is where the market would have been right here after this candle formed. So remember, you want to wait until that hour ends so that the candle can close. You don't have to be on a 1 hour time frame as a beginner. You can actually start out from a 30-minute or 15-minute time frame just so you can get more familiar with it. It's up to you. So your goal is just to get used to identifying these candlestick formations when they form. So you need these to happen in real time. You're looking for these in real time. It's just that most of the markets right now are moving in an overall downward direction, particularly because of COVID. So we are just going to have to use the past experience for an upward moving market. So this is a bullish morning star. We would have set the take profit. Sorry, we would have set our entry point here. I know I said I was going to try to speed through this, but I just want to give you guys the example because this is one of the more common ones. So when you set your stop loss, remember you're going to set your stop loss 10 pips below the lowest point inside of that candlestick formation. So that would be right here. All right, so 1.60789. All right, there we go, 1.60789. So this would have been your stop loss. And again, the stop loss is going to be a dark red. We're going to measure the distance between the entry point and the stop loss. So this is 37.9 pips. And we're just going to round that up to 38 pips. 38 times 2, that's going to be about 76 pips. Yeah, 76 pips. And we are going to measure from our entry point upwards, 76 pips, but I'm going to have to drag this market up so you can see it. So give me 1 second. So we're grabbing our measuring tool, measuring from the entry point upward until we get to 76. All right, so let's see, does the market actually get there? So that's 1.61936. Yes, patience will definitely be needed. 1.61936. So I don't know if you guys remember, there was one of my lives where I actually said, if you have never had patience before, or if you thought that you were a master of patience before, trust me, after you have traded, patience will become a commodity that you have in abundance. It grows because you have to have patience in order to trade inside of this market. All right, so let's see. From this candlestick formation, does the market go up? Again, we can use our 15 pip example of the stop loss because I want you guys to get used to seeing what that's going to look like. So first, okay, market goes on, it actually goes below, but you will notice with candlestick formations, it never goes below the lowest point of that candlestick formation if the market continues to move in that direction. So market goes up, market keeps going, All right, it's starting to go up. And boom, the market would have exited you with a profit. Now, let's see. If we had the 15 pip stop loss, so this is where that candlestick formation formed, you would have entered on this candle after this candle would have closed. So from here to here, you have 17 hours. So again, this is because I am a day trader, me trading on the 1 hour time frame. I am expecting for the markets to close within 48 to 72, sorry, for my trades to close within 48 to 72 hours. So now you guys can kind of see this and how it tends to form, how it causes everything to move. And again, the news actually tends to follow the patterns of the market. So you guys can see all of the examples of how this market, again, if it's a bullish market, you want to use bullish candlestick formations. If it's a bearish market, bearish candlestick formations. And each of these formations will show you where the market is most likely going to change direction if it's going down. So normally you'll see these candles forming where the market was previously going down, and then the sellers start to lose their traction, buyers start to buy, and then they buy the sellers right out, and you start to see the buyers taking control again. So this is the best place to look for it. Now, if we go to a smaller time frame, it's going to be much easier and much faster for you to exit that trade. I actually started out trading on a 15-minute, 30-minute, and 1 hour time frame. So do feel free to actually practice using the various time frames for whatever kind of lifestyle you have. I became a day trader because for me, I'm a pretty busy person, which means I only have a brief amount of time, maybe 2 to 3 hours that I can look at a chart from about 7 a.m. Once I set my trades, by that evening, usually, you could see this was 17 hours. So by that evening, I would have had my trades closed and I would have had my profits. So we would have had this one was actually 76 pips. So if you had a 50 pip goal in one trade on a 1 hour time frame, you were able to hit that 76 pips. So it's up to you. You can set a trade. Once you have your stop loss, your take profit, set it and forget it. You can use the dynamic stop loss or the fixed stop loss. That's the trailing stop loss. So make sure you check trailing and choose one of them if you want to use it. Just an example of how this would have gone. So in this candle, this stop loss would have actually moved up 15 pips. So it would have moved up to, let's see, just before that green candle came. So just a little below it, came very close. Wow. So that's 1.60939. And feel free to practice with however much you set that fixed stop loss at. It doesn't necessarily have to be there. 939. Oh dear, it's a little bit too much. Okay, there we go. 1.60939. So as the market comes down, the stop loss actually stays where it is. So from here, the stop loss would have stayed there. Market came close, didn't touch it, went back up. This time, it went up. That's 27, 28, 29, 30 pips. So at this point, your stop loss would have actually moved twice. So from here, it would have gone up another 15 pips, and then eventually it would have gone over your entry point. Now what happens is, because on this candle it would have gone over the entry point, when the market came down, it would have actually closed you out with a profit, but it would not have allowed for you to get to that full 76 pips. So you would have gotten essentially maybe 10 to 15 pips. Yeah, 10 to 15 pips as the market started to go back down. But if you did not set the dynamic stop loss and you just practice using the actual trading technique, then you can see you would have actually gotten your 76 pips. So it is totally up to you. You can also feel free to check on your trades periodically throughout the day. So if you notice that the market is doing this, do not sit there and watch the market. Because if you do, you will have a heart attack at least 8 times a day. Okay, please understand. The market will eventually go in the red, but as you could see, this here, the market would have been in the red. How much is that? Let's see. About 20 pips. So if the market was in the red, 20 pips, don't panic, don't exit. Let it do what it's going to do, because you could see that was only a temporary movement in the opposite direction for it to go further in the expected direction. So it's going to do that. Temporary movement in the opposite direction, and then further movement in the direction you expect for it to go in. So this is what we call waves, and you're going to hear more about that in the ABCD sequences in next week's session. Listen, guys, I definitely recommend that you are here for that. That is going to be a very powerful and insightful lesson. Please come back for that one if you don't get to finish this one. Please, you don't want to miss that. So it's 9:33. I'm just going to get through the rest of the candlestick formations. But the morning star is once again, one of the more common types of candlestick formations. So then you have the bullish piercing line. So let's see. Yes, you definitely do build a strong mental experience when you are trading. So self-discipline is one of the things you will gain. Please understand. You set it and forget it. Walk away, do anything else, do whatever else. Just don't watch the chart the entire time. Come back at it every 2 hours or so. You can adjust your stop loss if you want to, where you can set it over your entry point. But if the market has not gotten to at least halfway, I don't recommend that you manually touch that stop loss. So just let it be. Wherever the market is where it is. If it's in the green and you're okay with taking half the amount of pips than what you were actually going for, you can do that. But please actually allow for the Forex strategy to work itself out. You've got to trust it. Just let it do what it's going to do. This demo experience is going to give you an experience of a real or live account. Let it do what it's going to do. All right. So the bullish piercing line is the next one. It's going to have, it's 2 candles. So this is extremely easy. 2 candles. It's going to be a full body red candle or bearish candle on the right, and a full body green candle or bullish candle on the left. So very simple. Very easy to find. We actually had one of those that formed while we were waiting for our morning star to fulfill itself. So I'm just going to go back to that exact trade and show you guys. But again, it must close above, so that green candle must close above at least 60% of that red candle. So if you can find 50% of it with your eyes, just a little above that is going to be 60%. So it's actually on the entry point right here. This is the bullish engulfing candle that we actually had, or candlestick formation that we had formed while we were waiting on the fulfillment of this bullish morning star. So again, once you see that, all you would do is wait for the candle to close. On the opening of the next candle right here, you're going to select buy. Before you select it, I recommend measuring your stop loss, seeing if it's worth it. You don't want to risk too much. So you're going to measure from the lowest point of that candlestick formation down until you get 10 pips. So that's going to be 1.60856. For stop loss, you would type in 1.6. So that's 1.60856. And again, just to replicate that, I'm going to drag our stop loss up, 1.60856. I'm going to have to leave it in the general area, guys, because it looks like this is not allowing me to set it where it actually needs to be. We're going to measure the distance between the stop loss and entry point. And here we are looking to get, let's see, basically 34 pips. 34 times 2 is 68. So measuring from our entry point upward until we get to 68. Basically, we were looking at around the same price as the morning star. So that would have been 1.61880 for limit. Again, we're going to type in 1.61880. And once you have your take profit and your stop loss, you can select buy in this case, since this is a bullish market. If it was a bearish market, sell. So 1.6, that was 1880. Right, that works. So again, we would have seen the market after that started to come down, started to go up, started to go up, and eventually we got our take profit. And this time it would have been shorter. So this is another one of the more common types of candlestick formations. That would have been 13 hours. So instead of 17, you would have waited 13 hours. So now you see what it looks like. And again, whenever you're in this market, it may help to use the horizontal line, but if you can identify the 50% level, which is about here, and you can drag it up just a little further, so that would be about 60%. You could see this candle here closed above that 60% level, which tells you that this is a bullish piercing line. So that is what you want to look for when you are setting your trades. Yes, it is true. Daltrick Mills says when you sit there and stare, your emotions start to kick in. So definitely don't sit there and watch it the entire time. Set it and either look for another trade that you could set to practice, or forget it. Just walk away. Just watch. You could actually be earning money while you're watching a movie. So the entire time this is happening, you could spend time with your family. You could go out there, do your business. Literally, you could start a business and actually use this to further it. You could go out there, go to work. You could, whatever it is that you do, whatever it is that you want to do. Now you would have the opportunity to have the time, one of the most precious commodities in life, the time to do whatever it is that you either need to do or want to do. So we want to get you guys to a point where you're not relying on any job. You actually become an investor that is earning more than you use, so that eventually you can actually invest this in multiple ways and have multiple streams of income. And whether you're starting a business or whatever it is, whatever you're doing, you are able to then further not only your life, but able to, whether you are doing this full time or whatever it is, you're able to accomplish your dream. And this is why at the beginning of all of this, we asked, what is your why? Once you have identified your why, no matter how difficult this process gets, no matter how many times you stare at that chart and you see this going in the red, but you know it's not hitting your stop loss, you would have the patience to be able to get up, walk away, and then come back. And when you see it hit your take profit, then you just get to rejoice and praise God. Because again, what you just did was you allowed for yourself to get further in self-discipline. This teaches you so many things while you are in the process of actually learning how to invest and practicing your investing. And that's what I really appreciate about the Forex market. So we have two more types of bullish candlestick formations that we need to cover. The bullish tweezer bottoms are one of the most, and when I say the most, I mean one of the rarest types of bullish candlestick formations that you are going to find inside of this market. Please understand, if you find this, you definitely want to set a buy, because it is an indication that the market is about to shoot. And when I say shoot, I mean shoot upwards. It is one of the strongest but rarest indicators or indications. So Definitely screenshot this one, guys. You're not going to see it very often. And when I say you're not going to see it very often, I mean if I took the time to look for this inside of this market, it's very likely I would not be able to find it because it happens that rare. But it's one that's worth showing up when it does. Lastly, we have the absolute most common type of candlestick formation. And this is the engulfing candle, which Omar Mills actually mentioned before. So we had a bit of a spoiler there. So spoiler alert. I'm very proud of Omar Mills for knowing the candlestick formation. So great job, great job. And for everyone else for also learning as quickly as you have. And Tishwa Archer was able to actually give us an answer. And she said that this was her first session that she was tuning in on. So great job, guys. I'm very proud of you. And I really, really look forward to when we actually set our PIP goals, which is going to be tonight before 10 p.m. So that by the end of this week, I need you guys to please commit. This is why we are starting the WhatsApp group. This is why I have been spending my time teaching you guys so that we can actually set our PIP goals and we can start moving towards investing. Please, let's get serious about this, guys. Message me if you have not as yet. I'm going to put my number on the screen. My name is Cara Ellis, in case you may have missed that bit of information. But my phone number is 437-4326. Guys, please message me so we could get this started. Once you have your team of at least 3 persons, they are going to help you to stay accountable. And I need you guys to please help your partners to stay accountable. Please. Please. All right, so that being said, the engulfing candle, as I said, it's one of the most common types of candlestick formations that you will find in the market. Okay, so Triacha says that he sent me a WhatsApp already, which is awesome. Now I'm going to be creating WhatsApp, Signal, Telegram, and Facebook group. So that way you guys can message me on any. If you're not on one of them, you've got to be on any one of them because somehow you're watching this right now. So just please, guys, let's do this. Let's get together. Let's unite. Let's strengthen each other because once we unite, there's nothing that can stop us. And that is the secret to, Signal is one of the platforms that WhatsApp created. So after the creators of WhatsApp sold WhatsApp to Facebook, they then created Signal. It's one of the more secure, like WhatsApp used to be. It's one of the more secure. Daltrick Mills, I'm gonna message you on. You could, whether it's WhatsApp, whatever. Feel free to message me. You can download Signal, and we will get started on that for sure. And I'll explain more about what Signal is and how it works. But it's awesome. Okay. So that being said, the bullish engulfing candle, it has to be larger than at least 1.5 of the previous bearish candles. So there are going to be bearish candles on the left. Going to be. But it's going to be larger than the, at least 1.5 of the previous candles. It actually can be a green candle that forms after, before it. There can be, but it has to be larger than at least 1.5 of the previous candles, okay? So let's go to the markets and let's see if we can identify. All right, so this here is actually an engulfing candle. You could see it is larger than the previous 1, 2, 3 candles. So therefore, on the next candle, so we have a number of formations that actually showed up. So remember, after every movement in the opposite direction, this is where you're going to look for that candlestick formation to form. So after this engulfing candle formed right here, this is where you would set your next buy. We're quickly going to go through this because it's 9:48. Measure out the 10 pips from the lowest point within that candlestick formation. Now, of course, the lowest point within this candlestick formation, it has to be larger than the previous 3. So that's going to be from here. We're going to measure out our 10 pips. So that's 1.610, sorry, 1.61028. Just to show you what the stop loss would be like, 1.61028. All right, we're going to measure the distance between our entry point and stop loss. So that is 26.4 pips. We're going to round that up to 25, which is 50 pips of profit that we're looking to get. Measure from your entry point upward until you get to 50 pips. So that's going to be 1.61779. 1.61779. There we go. Up. I'm just going to have to leave it in the general area, guys, because it doesn't look like I'm going to be able to drag this down to the exact point. But don't worry, when you have a stop loss, take profit, and entry point, everything will automatically be filled in, or the lines will automatically show up once you set a trade. So you don't have to move anything. Now, if this is our entry point, this is our stop loss. Let's see what happens. Well, we kind of already know what happens. But at this point, we don't have any more movements in the opposite direction. And in a matter of, from here to here, in a matter of 9 hours, you've got your take profit. So there you go. So those are the bullish candlestick formations. Now we can actually go to other markets to see the bearish candlestick formations. And we are going to breeze through the bearish candlestick formations. The only thing that changes is the name. It's basically everything that you would have learned about just now, but just in the opposite direction. So, great news. The market is actually currently moving in a downward direction, so we don't have to go to another market. And if you were to turn those examples of what we would have covered upside down, right here, what would have been a bullish piercing line is actually called a bearish dark cloud cover, and you could see the market would have gone down after that. You can also consider this a morning star, just based on full body green candle on the left. This isn't really an indecision candle in the center, but it did form more like a spinning top. So in the center, and then full body red candle on the right, and you can see the market still went down. So that's one example called the bearish dark cloud cover. Now here it would want to look like a bearish shooting star, so full body green candle on the left, and then hammer on the right. So then you have the market moving in that overall downward direction. Now here, this is an example of what I was explaining about the morning star, where you're going to have sometimes a number of indecision candles in the center, and then a full body red candle or green candle if it's buying on the right. So this, it looks to me, so let me use this horizontal line. Okay, I am wrong. So it was not to the 60% level that was required, but it does look like what a morning star can form as. So here we do have the morning star, full body candle, indecision candle, full body red candle. This can also be considered an engulfing candle, if you will. This can also be considered a bearish shooting star. So I'm just kind of going quickly through this so that when we get to the bearish candles, we don't have to be in the market because it's 9:53, well, 9:54. And I'm trying to cover these before 10 p.m. so we could get to our actual pip goals. So for our bearish formations, we have the bearish shooting star, again, full body green candle on the left, and bearish, not hammer, hanging man on the right. It actually doesn't, yeah, it does matter if it is red or green. So bearish hanging man on the right. For the evening star, it's the opposite of the morning star. Full body green candle on the left, indecision candle to the top, and full body red candle on the right. It must close below at least 60% of the previous bearish candle. Feel free to go back and scroll all the way to the end of this video so you can take screenshots of each of these and just have them there as you're going through your charts to look at and compare and get used to. The bearish dark cloud cover. So again, that's going to be just like the bullish piercing line, but just upside down. So all of these, just flip these upside down and you have the opposite. So if you remember the bullish candlestick formations, flip it upside down and then you've got the bearish candlestick formations. If you remember the bearish candlestick formations, flip it upside down, you've got the bullish candlestick formations. So just like just to explain it, green candle, full body green candle on the left, full body red candle on the right. The full body red candle must close below at least 60% of the bullish candle. So tweezer tops. Hi Shane Butler, I am so sorry you came just before we were pretty much wrapping up. So I'm quickly going through the bearish candlestick formation so you guys can have it. Take the screenshot, keep it close to your computer as you're going through for the candlestick formations, just to get used to trading it and seeing what it's like using it. So this is when the market is moving in an overall downward direction. These are the candlestick formations that you're looking for. Feel free to rewatch it. We're going to end at 10 p.m., but just trying to hurry up so we can get to our pip goals and what we want to look to get by the end of this week. So at Friday, 5 p.m., we need to make sure that we have these pips, guys, because I'm going to be asking you in the WhatsApp, Signal, Telegram, and Facebook groups if you achieved your pip goals, okay? So let's do this. Tweezer tops. So the tweezer tops are, again, the opposite of the tweezer bottoms. They are going to have long wicks to the top. The wicks must cover at least 60% of the candle, and it's going to have a small body that forms to the bottom of the candle and a very small tail, so little to no tail. So basically, two hanging mans, but just the wick must be at least 60% of the candle, and it can be red or green. It could be two green, two red, red and green, whichever. Green and red, whichever. So it doesn't matter how the colors are, just that the wicks cover at least 60% of the candle. It has a small body that forms to the bottom of the candle and little to no tail. And lastly, we have the bearish engulfing candle, which is, again, the most common candlestick formation in the bearish market. So the engulfing candle, again, it must be larger than at least the previous 1.5 candles. So the candles are usually going to be bullish because, again, this is usually forming when the market is moving in the opposite direction of the trend. You guys will see what a trend is next week or possibly before Sunday, but I will let you guys know in advance. So by Monday, I will let you guys know before 5 p.m. Yeah, so you'll be able to identify what is a trend, and you will be able to not only identify what is a trend, but also follow the ABCD sequences, so you will know when the what we call retracement is going to end. So you're going to learn about what is a retracement and all that. But it's 9:59. We need to get to these pip goals. You see the engulfing candle. It's just the opposite of the bullish engulfing candle. So this is the bearish engulfing candle. We actually saw one of them within the market. So thank you all so much for joining us in this session. If you can give me just about 5 minutes, maybe 2, possibly 1. I just want to cover with you guys the pip goals. So please, guys, please. Oh, awesome. Omar says that he's in a sell trade right now in GBPCHF. That is awesome. I am very proud of you guys. Archer was also in one. Archer, how was that trade looking? Did you close with a profit yet? And if so, what was the profit? Let us know. So, yes, please identify your weekly pip goal. Well, actually, your pip goal for week number 1. We are starting out small, so I'd like to ask you to either choose anywhere between 50 to 100 pips for this week. Please be realistic. If you know that you can only be in the charts long enough to set one trade, whether it's on a Sunday, because you know Sunday the market is open from 5 p.m. until, because that's when the market actually opens for the week, then listen, please be realistic. If you can only trade 3 times inside that week, set it at 50. You know you'll be able to get it. If you know you could set a trade every day, all day, maybe you work from home, maybe you're always on the computer, so you have the free time to do this. Maybe you are a student, so you have internet access, you're pretty much available, you're taking your courses online. Whatever it is, please be realistic. If you are able to set at least 5 trades in that week, let's try to go for 100. Challenge yourself. But if you know you can only set 2 to 3, let's go for 50. Don't try to overdo it, but still challenge yourself. So once again, I'm going to be starting the WhatsApp group, the Signal group, the Telegram group, and the Facebook group. Please send me, whether it's a Facebook message, WhatsApp message, any message, as long as I can get it. Send it to me, and I'm going to add you. These groups are going to be started tonight. So we are starting our teams tonight. These are going to be the people that will help you to achieve your goals, and that you will also be helping to achieve theirs. So let's call each other. Let's keep each other accountable. Let's ask each other. Number 1, what's your pip goal for this week? Number 1, loving your 3 Archer, the 100 pips. Also, I see that you got the profit with 4.9 pips. Congrats. That is awesome. So I'm grateful that you were able to use this session immediately. That is awesome. But guys, let's unite. Let's do this together. You can go faster alone, but you go farther together. So let's do this together. Your teams are going to be starting tonight. The groups will be starting tonight. Your pip goals, I'm going to ask you to post it as soon as we start the group. And as soon as I get as many people that have identified that they want to be a part of this, as soon as I get everyone, I'm going to ask everyone, what is your pip goal for this week? Awesome. Thank you so much for sending me the message. I do apologize that I have not responded. I am in the process of starting a number of programs for Elizabeth because, again, I'm not just doing this for politics. This is actually something that I wanted to do to help Bahamian people for quite some time. It's what I did as a volunteer trainer with Master Trade House. But now I also want to be able to empower our people. So whether you're a part of Master Trade House or not, you should be able to trade. And this is something that is available to all Bahamians right now. As long as you have internet connection, if you could go to Starbucks, if you could, good night, Jay Sweeting, if you could come to this office anywhere from Monday to Friday, 10 a.m. Until about 5 p.m., we are usually open, unless, of course, we have meetings, then we may not have the office open at that time. But other than when we have the meetings, then definitely you can come to the office and you can feel free to use the Wi-Fi, set your trades, and even meet up with your clubs. So just make sure to bring your masks. We do have sanitizer that you guys can use. It's on Pinewood Drive. So if you can get here and you want to trade together, then that would be great. But we also have to be considerate of COVID, because of course there are still COVID police, etc. But other than that, let's keep this going. Even if we have to do this on Zoom, where you meet with your teams on Zoom, however it goes, whatever you can do it together. Let's do this. I know you guys can accomplish your goals. I'm gonna ask you what your actual dream is tonight. And the reason I'm asking that is so you can write it down. The Bible actually says, write the vision and make it plain. Why? Successful people have vision boards. Successful people have lists of things that they want to accomplish. And after so many months, they always go back and they look at it so that they can remind themselves, not only of the goal, but ask themselves, did I accomplish it? And I want you guys to be successful. That's why we're doing this. That's why I'm hosting these for free. Because again, I actually went to college for this, abroad. But I need you guys to become successful. So this is an opportunity where we can do this together. Have a great night, everyone. Thank you so much for joining. If you have any questions, you now see my number on the screen. Please take advantage of it. But the questions for any trading strategies, that is something that, again, is a service that is offered with Master Trade House. So I cannot give you guys that part for free, but you can feel free to watch these over and over. Or you can even message your persons that are a part of your trade team, and you could be able to take advantage of that. Other than that, you guys will be hearing so much more about Master Trade House in the near future, hopefully nearer than later, or hopefully sooner than later. But yes, you guys will be able to hear more about Master Trade House, where you can take advantage of whether it's the one-on-one trading sessions, where you can actually meet with me one-on-one, whether it's in person or online, and a number of other things you could be able to benefit from by being a part of Master Trade House, including there are hundreds of people that are actually already a part of Master Trade House, and they have their trade clubs, and there are persons that are always looking for persons to join their trade club. So we've already created that that atmosphere of unity and strength in numbers. So listen, guys, we can do this. I have no question. You guys can do this. All you need to do is put in the effort, and that's all I'm asking. Thank you so much. I will see you guys later. Have a blessed evening, and I really look forward to the dreams that are going to be birthed from this entire experience. I am looking forward to how the Bahamas is about to move forward with these successful people that I'm speaking to right now. And I ask you, when you accomplish that, please watch this again so that you can be proud of yourself and how far you have come, because I'm proud.